Hi, I'm Greg Corombos. Welcome to Banking Compliance Insights by Wolters Kluwer, a podcast series from Wolters Kluwer. This series was created to deliver insights on compliance trends and strategies for navigating today's regulatory and risk environments. Today's episode, Banking on the Way People Change, will focus on adapting banking processes and client outreach in the current environment. Here to lead our discussion on this subject is Wolters Kluwer Banking Segment Leader, Sameer Agarwal. And he is joined today by Skipper Hines, a Vice President and Credit Underwriting Manager with M&F Bank, to share his experience serving customers in this unprecedented time. Sameer, let me pass the conversation over to you.
Thanks, Greg. 2020 has been a tough year for sure. We've got a pandemic going on, social unrest, and it's a challenge that's continually pushed us to put focus on the ways we relate to each other. Society and the channels we use to connect with each other have changed, including how we conduct business. Today, we've invited Skipper Hines, a Vice President and Credit Underwriting Manager with M&F Bank. He's here to discuss some of the practical insights into how M&F successfully adapted their operations and customer relations during this time. And from what I've been able to put together, he's found some significant opportunities to help enhance customer care and how they conduct business and serve customers. Welcome, Skipper. I'd like to start to understand your background and your institution better as it relates to how you've navigated the pandemic and social unrest in the economy.
Thank you, Sameer. It is a pleasure to be here with you today. Certainly some challenging times that we've all been faced with over the last 6 months. And trying to navigate that has certainly been a chance to revisit how we do business on all levels. And as you mentioned, deal with each other on a daily basis. This time has been really interesting for M&F Bank. We were chartered in 1907. We're one of 21 minority-owned banks in the country, which is down from about 50 in 2000. And we are the second oldest Black-owned bank in the country. We're headquartered in Durham, North Carolina, which was once known as Black Wall Street, and have 7 locations throughout the state. Approximately 75% of our loans are extended to the Black community. As a minority depository institution, community development financial institution, and a founding member of the National Bankers Association, which originated as the Negro Bankers Association, our history is storied with supporting Black communities and other underserved minorities. So you can imagine what all of the social unrest and the Black Lives Matter movement has done to our communities and the demographics we serve.
Wow. It's definitely a different angle to our conversation than most of our customers, and which makes it very intrigued to kind of have you on today. What I'm interested in is, tell me a little more around how the social unrest has started to impact your business. Has business gone up because of it, or are you in more of a distressed mode based on what's happening socially?
You know, as unfortunate as what's going on is, we've actually benefited a little bit being a minority and Black-owned bank. You know, the Black Lives Matter movement is, not necessarily new, but obviously earlier this year it got reignited. And what we have seen is a migration of people within that community and in those minority demographics flock to our bank. In May alone, we saw a 30% increase in deposits and new accounts from individuals and the Black business community. And so at a time where we're not able to allow people into the branches, at a time where we're having to operate differently, we've seen an increase in activity that requires a lot of interaction with customers. The other thing that we've seen is Earlier this year, the Office of the Comptroller of the Currency, a federal banking regulator, updated the law to provide clarity around CRA credit to non-minority banks that partner with minority designated banks. And so the attention that this social unrest and movement has brought on the banking community is that large banks, who have always been supportive, if you will, of the minority banks, it's been taken to another level. And they are investing in minority banks. And our president, Jim Sills, has probably entertained 20 different large national banks, with interest in investing in our bank, knowing that 75% of the loans that we make in our communities are to the Black and minority-owned individual businesses and individuals.
Skipper, that's really intriguing. And what I'm sensing here is it's a social movement that's transcended into a political movement and ultimately creating almost a win-win for an institution with your demographic. And so I want to talk a little bit first about the social movement. And with individuals that fall into the minority category, moving accounts to your bank, what's happening in your local community with other banks? Do other banks fall short now with how they're performing and that performance is coming over to your institution? Or is it kind of a co-opetition situation where, okay, you're gaining, but also they have other places that they're winning where you're not?
I think it's probably a combination. Obviously, there is a loss of business on their part when somebody leaves and comes to bank with us. As a community bank, we can't be all things to all people, but we are focused on serving our demographic and fulfilling our community development, mission, if you will. And so I think that while we're probably the biggest beneficiary, there are other ways that those banks are probably finding out how to capitalize as well.
So from an operations perspective, I know you quoted us that there's a large increase in your business. Tell me what you've had to do to adapt into this environment. So we've got, you're winning because of social unrest, but then we've got this pandemic going on. Are branch lobbies still open, or how's your team been restructured or positioned to operate in that world?
In North Carolina, there's still a number of restrictions, on us by the governor, and rightly so. But our branches are open by appointment only. And so the doors aren't open for people just to walk in. Our drive-throughs are open, and, we've got all lanes open rather than just two, like we used to. So with the branches not being open, we've had to resort to using alternative channels to transacting business with our customers. We're utilizing virtual appointments and having webinar, FaceTime conversations, if you will. If someone needs to get into the branch, say to get into a lockbox, if you will, we'll schedule appointments. And obviously we've got all the safety products at hand, masks, gloves, things of that nature. But basically the branches are in effect closed, and our customers have had to adapt to that. And we've been re-educating our customers to utilize these other channels, which they have not been exposed to or had a reluctance to use as a secondary source of transacting business.
Can you give me a couple examples of the tools that you're using? Are you using virtual meetings now? Is that
yes,
both internal and external?
Yeah, we're doing virtual meetings, internal and external. Continuously working to improve our ability to open accounts online and apply for loans online. The use of our mobile banking application and the use of our online banking application usage has skyrocketed. as compared to what it was before. So in the introduction, it was mentioned, changing the way people bank and banking on the way people change. The pandemic is definitely doing that. Customers and businesses are adapting to that pretty resiliently. Change is never good in most people's minds, doing things differently. But everybody has kind of risen to the challenge and understanding that we're all in the same boat.
Do you find customers adapting and accepting, or does it create more frustration with your customers?
Honestly, Samir, we haven't seen a lot of frustration from our customer base. Surprisingly so, given the stress and strain that they're under. But they have been very accepting of that. I use the word resilient. Everybody from the millennial to the older adult, they've adapted and they've adapted well, and I think have welcomed some of these new channels with the knowledge and having experienced it somewhat that, this really is a good way to do business, and it's something that I think will probably continue to be a channel that they'll use in the future.
Would you consider the current economic environment that you guys are experiencing putting you in a better place, or having to have learned faster than some of the competitors in terms of, you've got higher volumes because of the social piece of it? And how would you rate yourself compared to the local competitors?
I would rate ourselves excellent compared to our competitors. What has really occurred is there are lots of things that we had on the horizon that we wanted to do to sort of improve the way we approach our customers and the opportunities they have to interact with us. And we've accelerated that into, let's start doing those things now because our customers need to have those available to them.
In the realm of camaraderie, what would be the number one piece of advice you would give a competitor?
That's a really good question, Samir. We're all friends in the banking business, and we're competitors. I think we all need to understand that we each have our strengths and we each have our weaknesses. But at the end of the day, our job is to invest in our communities and support our customer base to get through whatever the near future holds for us. And we need to do that together.
I'm going to rewind a little bit. Let's go back to CRA. That's the other kind of tone, even though the increase in business kind of says, all right, here's how we operate in the pandemic. And I think you guys are doing well from what you were telling me. How are you seeing another increase in your business via CRA? So you have large institutions trying to partner with you in terms of origination. And is that mainly because the larger institutions don't originate themselves, or how are they getting CRA credit?
Yeah, from a banking perspective, and there's another level of support from minority banks that I will touch on, but from a banking perspective, the fact that 75% of our loans go back into our communities to Blacks and other minority groups is tremendous. And other non-minority institutions, and I mentioned the change or the clarification in the CRA guidelines, is that a non-minority bank can put $10 million on deposit with us, knowing that $7,500,000 of that is going to go out to support the minorities in our community, and they get credit for that because they are providing capital to us to deliver to that community and that demographic.
That's a great way to do it. So it's not even a warehouse line. This is pure investment from the means of a deposit, and then using the capital ratios to really use from a banking perspective in deploying funds. It's pretty smart way to get CRA credit, pretty smart way to also reinvest in the community. Are there other ways?
One of the other things that has occurred throughout all of this with the attention that this has given minority banks is large corporations and large nonprofits, not just non-minority banks, are seeing it as a way to invest in minority institutions for social purposes, because we're the vehicle with which to help the Black and minority communities. It was in the news, 30, 60 days ago about Netflix pledging roughly $100 million for that purpose to support minority organizations. And part of that included, I think, a $25 million pledge directly to minority financial institutions, where they would place those funds on deposit so we could deploy that out to help those people in our communities.
I would imagine that this would come out as a viral tactic for many institutions. I mean, it's almost risk-free to some degree, other than the large amount of money that's being put, but it's being put in a deposit account. It's not being put in, an investment account. So that's very, very interesting. Do you expect that to take on more and more? I mean, Netflix is doing it. Do you see other corporations kind of following suit?
Yeah, there have been a number of others. As I mentioned, we're a founding member of the National Bankers Association, and they are receiving inquiries from a number of organizations like that on a really large scale. And being part of that organization allows them to kind of help all of the member minority banks do that. But to answer your question, yes, there have been quite a few other large organizations and small follow the lead of Netflix. As to how long that will continue, who knows? A lot of this social unrest is very well founded. It's getting a lot of attention. Hopefully that will bring about, as you said in the opening, an opportunity for us to improve, all of us as citizens of the country. But how long that will last, I don't know.
What keeps your management team up at night? What are the things that you guys worry about in the current operating environment?
Well, I think there are really two primary things is, obviously we're concerned about shareholder value and the thing that every company is worried about. But at the end of the day, we're worried about keeping our employees safe, taking, every step that we can to serve and protect our customers and help them through these troubling times. A lot of people think that the pandemic is maybe created an environment where people are spending less time at work, when in fact, we're spending more time at work and reaching out to those people in our community to find out how we can make a difference. So it's really about our people, and it's about the people in our community. Obviously, you worry about, what the long-term effects are going to be, what the government support and response is going to be and continues to be. We all want to get back to whatever the new normal is, and with that starting with there being a ability to get back to not having to wear a mask, and that's probably not going to occur till a vaccine is released.
It sounds like a concerted focus on two main goals to kind of keep the business moving. We look at your business. Are you more centric on the consumer side or on the commercial side?
More on the commercial side. A lot of commercial real estate. We do a lot of lending to faith-based and nonprofit organizations. And so we deal with a lot of churches, and we deal with other nonprofits. We deal with a lot of commercial real estate and are looking to diversify more on the commercial side, so that our faith-based is not such a large percentage of our portfolio, even though it's a great part of our portfolio. But we are a commercial bank. We do consumer lending. but that's a small part of what we do.
Were many of your clients able to take advantage of the SBA's Paycheck Protection Program?
Yeah, we're proud of our involvement with the PPP loan program. We helped 172 businesses secure PPP funding with gross dollars of about 16 million. And of course, 75% of those pretty much went to the Black and minority owned businesses. And that may seem small in the grand scheme of things, but is huge for a community bank of our size. And, we've put some numbers together about probably saving 1,300 jobs in our communities. And we're fortunate that we were able to do that.
It's a commendable effort, huge effort. And did you guys end up using a software, or this was homegrown, just human capital processing?
No, we have a lender services provider that's a partner of ours that helps us with our SBA lending, which we do and previously did before the pandemic. So we were set up, and they were prepared to support that effort for us. So we couldn't have done it without their help, because we just wouldn't have had the resources internally to try to manage all of that in such a short amount of time.
Do you anticipate any negative impact, from the loans being made? Are there any forbearance requests or any deferrals that are being asked for now from your clients?
Initially when, things when it was determined that, hey, this thing is kind of here and it's serious, and the states and the government, started kind of shutting everything down. We had already put a plan in place to help people with deferrals, businesses and consumers. And so we did in April and early May, we extended, I can't remember the exact number, but it's in the hundreds. About $90 million in loans were deferred. And most of those were deferred for 90 days, some of them for 180. And we're staying in close touch with those people, and their payments started resuming in August and September. And, fortunately, they've been able to get back to some sort of operation that's allowed them to start making payments again. And hopefully that will just continue.
So that must have been a huge stress for the operation of the bank. And was the decision to go there, it's just, that's how you support your community? It was more qualitative than anything quantifiable?
Well, I think it was what we had to do. It was what we needed to do. It was the right thing to do, for lack of a better way to put it. There was, there still is a lot of uncertainty out there, but, hopefully I think things have kind of calmed down from that original hysteria, if you will, or initial hysteria. But, when all of this sort of came about, it was like a huge unknown. And if nothing other than to show our support for the customers, and fortunately being in a capital position to be able to do so, we were very proactive in offering deferrals.
So I'm very curious about how you guys do your forecasting. I mean, I can drive in my small town here and see many businesses just turn over, even a lot of empty shop space, just waiting for new businesses to come in once the economy turns. How's M&F kind of looking at those portfolios and which customers are kind of at risk, and how do you evaluate what to do with those situations?
Yeah, forecasting is always a challenge. In this situation, obviously that level of challenge is even higher than we could ever imagine it would be when we're trying to figure out where's business going to come from.
Well, the risk indicators have changed, right?
Yeah, exactly. And, the first thing we did when we realized this was not just a little short-term bubble is, we took our portfolio information and looked at the industries that were, at risk, and what was the makeup of that in our portfolio. and, made the decision. There were certain industries where we would not, extend financing temporarily until the crisis and everything was kind of understood about that. You've got a situation where businesses are being forced to close and they have no choice at that point. And so I'll use restaurants as an example. They were one of the hardest hit right off of the bat. Fortunately, PPP was a way to sort of help them at least through the short term. So those restrictions for us are still in place. We'll be doing two things, is we'll be carefully monitoring and who we target. There are certain industries that have benefited from the change in behaviors. Amazon, just to name the one that everybody thinks about, but everybody's gone to that online platform and things of nature to drive business and the medical field, if you will. But so we're targeting industries. Some we're not targeting like we were in the past. And I think that probably for the foreseeable future, we will be relying on Small Business Administration and other guaranteed loan programs to give that additional support to help do things that we might not be able to do conventionally until our economy has a chance to recover.
That's an interesting point. Do you feel that many people in the lending space are going to start to rely on SBA loans versus traditional commercial loans?
Yes, I do think so. Certainly in the community bank space, I think it's critical that be part of our approach. In the large bank space, they may have some different thoughts about that. But I do think it's critical for us. And in many cases, what that does is it doesn't make a bad deal good, if you will, but it may make a good deal better because it might offer some advantages to the borrower that helps them preserve cash flow.
Makes sense. Just really makes sense on a strategic play. And I don't know if you meant to state it this way, but the way I'm receiving it is that is some great advice for competitors or other community banks that are in this space of how do you navigate and strategize about your next move.
Samir, sorry to interrupt, but I think a really good example of that is, in the late 80s with the S&L crisis. And coming out of that in the early 90s, the SBA and guaranteed programs was a huge part of that recovery effort. And it might need to be in this one too.
When we talk about that being one of the avenues, are there any other avenues? Like, do you look at other opportunities that are now coming about? One is clearly, guarantees around commercial lending. Are there any other opportunities to streamline operations or to enhance how customers are cared for from a banking institution?
There's only so much you can change in what a loan package, if you will, looks like and the types of loans that are made. But what you can change is how you go about that approach. And that's something we really need to work on, particularly in the business space. We can't go visit a business owner today for the most part. They can't come visit us. And so you can't necessarily drop off information and things of that nature. And we've got to figure out a way to use technology, just like we do on the consumer side and in so many other aspects of the business world, to engage with the business and commercial client to improve that process. So I think that's the opportunity. The big differentiator between banks, regardless of size, is how you treat your customer and how responsive you are while being able to maintain a good, close, personal relationship where they feel comfortable and you can instill that trust. We've all got to work on that, and that's an area of opportunity that I think we excel at. but something that we can't just sit where we are and rest on our laurels. We've got to make things better in the business space.
Does that mean that it's inclusive of the medium that we're communicating? Like, it took a while, for text to take on, but now you've got text and other types of communication, whether mobile device or not, that customers just get drawn to. Does that mean banks have to adapt? Have you guys adapted to that type of communication on mobile and non-mobile mediums?
Yeah, we have some, but this experience that we're going through now has identified that we need to do more of that, and we need to do more of that faster. I think what kind of historically for community banks who may or may not have the resources to have the most current technology, as some of our competitors, a lot of times our customers and our employees think of these alternative channels like online banking, like mobile banking, like, scheduling virtual meetings with your customer. So because they can't come to the bank. Well, now they don't even have to leave their home and see you face to face. Those are things that were all out there and considered secondary. And this pandemic has forced us to use those. And I think that's a good thing, because what we considered secondary has now become primary. And going forward, it just opens up a completely new avenue that, while it may seem a little less personal, in fact, can be more personal and a lot more efficient, because you're having a conversation with each other and nobody having to drive to get there, or doing things after hours. You hear numbers from time to time about how many people do their banking, in the wee hours of the morning or the wee hours of night.
Yeah, big decisions are made. I think I was reading between 11 p.m. and 1 a.m. in typical households now. It's almost as if there was a fortune teller in our midst in the 80s of the United States. If you remember Back to the Future, they depicted a lot of interaction taking place on the family television screen, whether it was work, banking, other types of services. Everything took place through video on one of those screens. And it almost feels like we're now living in that environment.
You're right. It's one of those things that you always said, some people have that, some people do that. And now it's like, okay, everybody's doing that.
It's a lifestyle change. So in that environment, how do you guys think about growth? Where is growth in that environment? Now it's not about strategic geographic placement of where am I at the right time or right place for that matter. Now interaction and opening, a new interaction or lead has changed. How do you position yourself for growth in this world?
That's another good question, Samir. Any growth is going to be initiated two ways. One is being out in the space where the demographic is that you want to grow in. You've got to be in that space, and you've got to either do that through marketing, targeted marketing, all of the social media stuff. I think social media has been a huge aspect of the Black Lives Movement. And back in 2016, there was a movement that got a lot of energy at that time, that it was all because of social media and Bank Black Week and Bank Black Month and things like that. So you've got to be in that internet social media space to attract attention to your demographic. But, at the base of every good relationship, you've got to make some connection with them and reaching out to people, providing an avenue for them to reach out to you. But the approach to a banker reaching out to people, I was never a big fan of trying to do too much over the phone, because I like the in-person. So you can imagine how much I've had to change over the years. So I think that you're going to have to target and you're going to have to reach, and you're going to have to be efficient and responsive and, be better than the other guy down the street.
Oh, Skipper, it's been a pleasure to speak with you today. I think there's excellent amount of information that you've been providing and a lot of guidance into how to operate and what you guys have done and demonstrated by your business in itself. Navigating the pandemic is one thing that most of us are going through. Navigating another piece of it where the social movement is meeting, a real economic and political movement is another. Great to hear your suggestions and how you've navigated through those. And let me, just say thank you. And I think that our listeners are going to really, gain some insights into how they can apply them to their institutions.
Well, thank you, Samir. I really appreciate you having me on, and wish you all the best, all of us, in the days ahead.
That's Wolters Kluwer Banking Segment Leader Samir Agarwal, joined by Skipper Hines, a Vice President and Credit Underwriting Manager with M&F Bank. Wolters Kluwer is the host of this podcast and a market-leading provider of advisory services and technology solutions for optimizing compliance and risk management programs. For more information and additional guidance, please visit wolterskluwer.com or call 1-800-397-2341. Please join us for future podcasts focused on navigating emerging trends in regulatory compliance.